TradeTheNBI.com. This is John. This report is for the 13th of December. And lots of excitement the other day. The pre-guesstimation of what the CPI numbers are going to be and what it will mean. It's really not going to change a whole lot of things, but what we do have is just a significant change in what was taking place from an MBI reading that catapulted Magenta back up above and basically restored the Santa rally just in time because uh, things weren't looking good. And they've got quite a ways to make up to get the year looking not so horrible. We're going to try. Need to get that back up there. They need it. For what? We don't know, but they need it. Plus, you just, again, when you have so much evidence that things are going to go one direction, um, you kind of do a counter. But as I've pointed out, the resilience in the economy and that, but with what you're starting to see elsewhere is this apocalyptic prediction for the second quarter probably of next year, where things start to hit. But as I pointed out, even the Fed isn't going to change pace. The reality of it is just that you're just going to get unevenness in the economy, which conveniently oil prices plummeting, which that's been fantastic. They took a little bit of a jump on this last setup, but um, it's still in the mid 70s. Is not horrible, but it's not great. The NQ, identical readings there, the nice pop up. But here's the problem with this. Even though the magentas popped up, you see that DOC, that orange picked back up. Nothing's changed between cyan and red when orange stays in between, and particularly with no dip below. It's potentially short lived. So bear that one in mind. And that's part of just the general trade that's going on right now. Um, Treasuries all over the place. Not really a great auction that they just had, and you could see potential sell signals coming in there, which would drive rates back up. Because what if the Fed actually intends to continue raising rates and isn't going to stop? This whole move was an error, and they're going to have to fill it back in. And from an oil standpoint, there was the little pop. Nothing major. I mean, back up to 74, 75 range. If it stays under 80, it's helpful. It's just not going to change inflation, though. You're still going to be relatively rapid overall inflation, particularly as wages and things like that start to catch up. And again, we had those question marks on wages and whether or not there was a momentary blip versus something more systemic as far as uh, significant wage increases versus layoffs and severance packages. From a gold standpoint, still holding on, took a little bit of a hit in that previous one, but at the end of the day, again, this continued dilution of currencies, it's going to improve over time. And the euro, of course, maintaining itself, and no reason it won't, unless oil spikes back over the 80s. It should continue to climb steadily. Bitcoin actually popping up to that 50% range. It's just doesn't have a whole lot of momentum, and of course they've arrested the FTX owner, and he will obviously undergo uh, lawyering. So we won't hear much about that for some time. He's supposed to appear before the Congress, and his arrest obviously prevents that from taking place. So that's not going to happen. And ETH again also flat. It's just a mixed mumbo, but starting to see a little bit of short activity. Couldn't get enough to generate too much from a buy standpoint. So the malaise in crypto, I think, is still continuing. And from an ES standpoint, you can see the turnaround took place. Buy signals came through. Nice and clean. Good shakeout. Everything was positive from that standpoint. And from a 5K, again, tiny action, but it was all one sided for the most part, just to the up. We had the previous, just slide back a little bit if it cooperates. There we go. Previous day sell that came right before the close, filled it in the bottom. Pre-market started to stabilize once it was over the 50%. We were getting some of these white MBI setup readings, but just as they were starting each time, magenta popping back up, causing a little bump, but worth noting, positive extremes begin around the 39.80 range. So those all have to be filled. So it's likely that we're just going to be revisiting these same algo levels that we've been at previously. You can see us hitting up against that 4031 right there. And once the numbers come out, the market will react violently again. And it just becomes a great play. We get a huge number of options expiring coming up. So there's going to be a lot of wild activity. And I think from an intraday standpoint, it just makes for some nice, easy runs when they take place. More from the daily, though, I think we're just still in the consolidation phase. I don't think there's really a defined direction. Of course, the bias is towards the same to rally, but economic conditions certainly aren't warranting that as the correct path. But we will take it day by day. As always, though, trade well. We'll talk again later.